Hi, welcome back after the break. We're on to question number 24. So if you can hear me, can you please write me or say yes? Is my voice good? And you can see me, you can see my screen. And if you say yes, and more confirmation. Do you hear me, guys? Yes, from Fatima, from Rahat. Yes, I can see here as well, I believe. Okay, going on, question number 24. This is our last session. What is the residual? I need to take the color of my pen. Yeah. Residual profit. Residual profit means profit after interest on capital, interest on drawings and everything. Yeah. Profit minus interest on drawings, interest on. Listen to me, guys. Interest on capital. Yeah. So it is an expense for the business, income for the partners. Yeah. Why? To encourage partners to put more capital in it. Interest on drawings is an income for the business, expense or money down for the partners. Yeah. Why? To discourage them for the drawings. Am I understood? Yeah. So we will apply the same formula here. Alex and Jose are in partnership. Under the terms of the partnership, Alex is entitled to a salary of 11,000 per annum and profit for the year given. Interest on capital, interest on drawings given. Great. So residual profit. From this profit, like profit for the year 43,877, what do we add and what do we less into the, even if it is a current account or is a partner statement account, yeah? Interest on capital. This is an income or expense for the business. Tell me. Or write me. Interest on capital. A little earlier I said it. Interest on capital. Ooh, be careful. Yeah, expense is the right answer. Yeah. So you minus interest on capital, company giving to the partners. So it's a minus. So INT on capital. And interest on drawings, companies getting, right? Interest on drawings. So INT on drawings. Well done. So from company's point of view or partner's point of view, not company, come on, partner's point of view. So how much it is then? You just add up together and write it, add up together and write it, don't you? Interest on capital, 70,500, right? 70,500. Interest on capital is 70,500. And that's what we minus. And about here, interest on drawings, 5, 6, 7, 8,000 and 8,900, is it? 8,900. So what is your leftover profit or residual profit? Can you please do that on your calculator and give me the answer? Come on, faster. Can do on my calculator as well. I had a profit. And then from that, I added interest on drawings. Unless I'm getting some answer, 35,277 minus 17.5. Okay, tell me what we are missing. Salary. Is it income? Is it company giving or getting? Is company, partners, partnership business giving, isn't it? It's giving to the partners. So for partners is their gain, for business is your loss or expense. Thank you, Fatima. So minus that. Minus from this 35,277, 11,000. Minus 11,000. 24,277. Salary. Interest on capital, interest on drawing, salary. Yep. Salary is a minus as well. 2477. 24,277. Yeah. Thank you very much. 24,277. Thanks, those of you are working. Well done. This is brilliant work. Erasing it. Moving to the next question. Which of the following statements regarding inventory valuation is correct? Leaving on you, A, B, C, D. And giving you 30 seconds or 1 minute. Here is my TikTok on screen. You can say TikTok. TikTok means TikTok, TikTok, the clock. 1 minute given. The next question. Let me try as well. Am I getting any answer already? Let me check. Not yet. Okay, I got an answer. Don't worry. Wordings are very difficult, I'm telling you. I'm getting very, very different answers. I got D, I got B. Interesting answers. 3 more seconds. 1, 2, 3, done. Okay. Oh my gosh, I got A, I got B. Did I get A? Yeah, I got A from Hema, C, Fatima, B, Rahat, Nafiu, all in D. I got everything. A, B, C, D, everything. What is the answer? Let's get into it. Yeah, for 2 marks, don't lose it. Generally, people, if you remember somewhere in this lesson, I said inventory, IS2 says inventory should be valued at lower of cost and net realizable value, whichever is lower in between these two. And inventory should be valued at cost only is not a good answer. Between either lower of cost or net realizable. So if I read the first one, they put the wordings purposefully heavy. Look at this. Inventory value should be excluded profit, which has not yet been earned. This is a true statement. This is a true statement, but we don't know whether this is the answer or not because we need to read the further as well. We will take the best answer. Because in the inventory, profit element should not be there. Like markup or margin, you need to take it away. They said all items. Now, all is not a good word. All items held in the inventory should be valued at cost. No, it could be valued at cost or net realizable value, whichsoever is lower. So 2 is not the right answer. B is crossed. Number C, inventory should be valued at anticipated selling price less any cost, which is income. This is the definition of NRV, net realizable value. This is not the regarding statement valuation, I mean inventory valuation. This is an NRV. And the D, the purchase price of items which have been held for the longest period is an acceptable method of inventory. Nothing written in the book or anywhere or any rules like that. Longest period. It could be a weighted average. It could be longest period. FIFO, LIFO, AVCO. The best possible answer is inventory. There should not be any profit in it. Yeah. A is the right answer then. Makes sense. Wordings are tricky. If they ask me the definition of inventory valuation, it should be valued at lower of cost and net realizable value. Who says it? IS2. Depreciation. Again, taking the TikTok on screen. Why are you, Mr. TikTok? TikTok means the clock. 1 minute given. Gave me the right answer for definition. I mean, depreciation. I got some answers already from Fatim to Rahat, Tuba, Hema, Olin, Nafiu. Everybody says A is the right answer. So taking the TikTok and 1 minute. What is A? Allocate the cost of non-current over the accounting period expected to benefit from the use. This is correct, to be honest. I don't need to read the other one. Or another definition is spreading the cost of the non-current asset over the time. Yeah. Or allocate the cost of the non-current. It's the same thing. 27. Samantha has prepared the following bank reconciliation. So this is a BRS question. Yeah. Bank reconciliation statement. And what is being asked here? How should the bank balance be reported in Samantha's financial statement of financial position, SOFP? So look at this. Balance on bank statement. When we receive the bank statement, it's overdrawn. There is outstanding lodgement, unpresented check, or outstanding lodgements and outstanding checks. Guys, tell me, these two are recorded in the cash book. You agree with me? These two are recorded in the cash book, not in the bank statement. So according to your cash book, this is a true statement. Highlighting. Balance, ledger account means cash book balance, okay? 202 debit, and that is the correct amount, because lodgements, outstanding lodgement, unpresented checks, it should be written into the BRS. Bank reconciliation is a two-part. First part is updating the cash book, and second part is doing the bank reconciliation statement. So these two items gonna go into the BRS. So cash book updated, that means balance per cash book is correct answer. And this is the debit means asset. 202 is an asset. I think C is the right answer. It should be the right answer. Don't worry, I will send you the answer of this material as well. Yeah, the real answer. I don't think I have opened it here, but I will give you in the email or WhatsApp. I got some, yeah, Stella and a few, Olin, they said some answer, but 202 as the current asset is the right answer. Okay. 28. What is the balance on the Tony's capital account at the year end? Let's see. Tony sounds like a sole trader. At the start of the year, the balance capital account is this. During the year, Tony made a drawings and the net profit. Boom, boom, easy peasy, isn't it? Opening capital plus profit for the year, less drawings. You get answer, don't you? We have done this type of question before. I can take my calculator straight on the screen. Can you please give me the answer? Capital 35,869. Plus profit for the year is 18,700. Minus how much is the drawings? This type of question, you should save time and boom to the next one confidently. 36,769, is that what you got it? I believe so. 36,769. Thank you, Fatima. I believe everybody got it. This is an easy peasy question. 29. Again, reading the requirement is good to go. What the value should be included in the residual financial position? Irrecoverable. Interesting. Irrecoverable and doubtful debt comes in the exam, right? So this is a new topic. So for 30th November, Charles is owed a total by his customer. So it's the SLC or receivables. Let's assume trade receivables 72,660. His receivables allowance brought forward from the previous year. So this is opening of your doubtful debt. Opening of the doubtful debt. He estimates that his receivables allowance should be equivalent 15% of the amount due, which is this 72,660. There is no irrecoverable debt, so we are not minusing it. So straight away do 15% on it and give me a figure 72,660 times by 0.15. So 10,899. Thank you, Nafiu. Thank you, Fatima. It's a 10,899. I'm generally asking, is it a good news for your business or bad news for your business? Just write me. Good news or bad news? It can help little. Your opening receivables, doubtful debt was 11,000. Closing has gone down. Good for you or bad? In accounting words, income or expenses? Thank you, Fatima. It is good. Good by how much? Let's get the difference. 11,700. 801. 801 is credit. Good. Credit. 801. If you ask me, Sir Ilias, can you please draw provision for doubtful debt T account? It's a credit account. On the balance BD on the credit side, 11,700. Then you found a how much is the current year's what do you call it? How much is that? 10,000. 108.99. 108.99. but in the income statement, this is balance CD basically. Yeah, CD becomes BD. 10899. But in the income statement, how much goes? The difference goes 801. In the provision for a doubtful debt, it is debit side, but in the income statement, if you meant to do income statement T account, it is on the credit side, 801. Then you get the 11700, 11700, the higher side, whichever side is the higher. So income, good. Income by 801. If I ask you in the balance sheet, how do you do? What do you do? The same current year in the balance sheet, what do? Do you agree that you deduct this 10,899 from the receivables, from the 72,660? The answer is yes. In the current asset, trade receivables 72,660 minus 10,899. Thank you very much. Thank you, Fatima. Thank you, other students. Moving into the next bit. Sorry. Next bit. Reading this, what is the correct bank control account balance? In short, cash book. Bank control account balance wordings. Yeah, the cash book we maintained. Okay, our cash book bank account. What is the correct one? In that would be. So let's read the question first. Sarah's bank control account. Again, what do you mean by bank control account? The cash book we maintain. Yeah, like T account we maintain, and the cash book. There's a cash account. There's a bank account. Yeah. It shows a balance in the bank 2280, and the bank statement at the same date reveals the following differences. We have an unpresented check. We have bank charges not in the cash book. You need to answer me a few things here. I repeat the question again. From the top, I'm reading it. You see the bank control account, we have, according to our bank, 2280. We have a balance, right? So bank charges not in the cash book. So if you take in the cash book, do you add or less? Write me, please. You less. Thank you, Nafiu. So minus, thank you, Hema. Minus 40, I'm going to do straight away. Thank you, Stella. Thank you, everybody. Receipts not yet credited by the bank and unpresented check. These are in the BRS you do, not into the T account. The question asked you control account. What do you do into the T account? How do you update it? Dishonored check not in the cash book. If it is not in the cash book, put in the cash book. Yeah. What do you mean by dishonored check? You received a check, recorded in the cash book, went to the bank. Bank says, sorry, we can't honor this. The other guy doesn't have enough money or any other problem, maybe dodgy signature or some problem. So that is not recorded. You need to record it as a what? Dishonored check. Do you add or less? Again, my question. When you receive the check, you already added. Now it's dishonored, you less it. Thank you. How much? 120. That's it. Whatever is the answer is the answer. 2280 minus 40 and minus 2120. Now, if you says, I will take your answer. If anybody else disagree with this, you can. Then I will calculate. Otherwise, I will take the answer from Nafiu. Thank you. Moving ahead. 31. Very interesting question. Sweet and simple, but it will give you a lot of brainstorming. This question is a goodwill. I believe one or two more questions we're going to do, then we'll wrap up. In partnership, goodwill should never be there. Yeah, in a systematical way, goodwill created and goodwill written off. Repeat. These videos are given on my YouTube channel. You can check it out, make yourself competent. Goodwill created T account, goodwill written off T account, goodwill should be 0. There should be no goodwill. But just generally think, me and my another friend doing business, successfully doing business over the 5-10 years, a new person wants to join us. So we said, look, you can't straight away join us. You need to give us some goodwill money. Does make sense. Like we have good name and fame, doing well, good business. The other guy coming in, not just with money, also goodwill, extra money to us too. That is the scenario or concept of goodwill. In a systematical way, goodwill should be erased. Yeah, because of partner coming in, us existing partners will be benefited. I repeat, us existing partners will be benefited. How they're saying it here. In this particular question, the existing partner just bringing the goodwill money only. Have a look. Maura and Carrie have been in partnership, sharing profits and losses equally. 1st of March 21, total value of the capital is 225,000. Good big money is there. At the start, at that date, March, Delia was admitted to the partnership, and the agreement, what is the agreement? They'll share the profit and losses equally. Okay. Goodwill has been valued 75,000. Goodwill not be maintained, and that is ever true. Goodwill never be maintained in a systematical way. It will be 0. How? Goodwill created account, goodwill written off account. Delia would introduce cash to ensure that her opening capital balance. Come on, she's not bringing any opening capital. She's just giving the goodwill money. Just goodwill money. Must be she is very competent in her job. We need her. So without money, we are bringing her in. But how much goodwill money of this 70,000 she gonna give it to you? You see, GW created. That is one account. And GW means goodwill. Yeah, goodwill written off. Goodwill created based on old ratio. Goodwill written off based on new ratio. What is the new ratio? Old ratio also two equally, and new ratio also equally. But in the new ratio, your partner coming in, I'm not making it further longer or lengthy. 75,000, you just divide by 3. Each goodwill valued is 25,000, 25,000, and 25,000. So goodwill created basically debit, and goodwill written off credit by 25,000, and written off would be half of this. This requires long teaching. For this particular question, it asked how much Delia is bringing in. Delia didn't exist before. Delia is a new partner, and new partner, according to the new ratio. Your life is easy here. They said equally. What if they said any other ratio? You should have followed that ratio. So new ratio, 25,000 is the answer. Not taking it longer. Thank you, Fatima. Like takes a little brainstorming. Yeah. So that is your goodwill written off. I believe I'm going through the last question of today's, then we'll wrap it up. I'll give you the other as a homework. How should discounts, which are another tricky question, very tricky question. I saw this one earlier. We have been doing this. Allow the customer for early settlement to be treated when a statement of profit. Yeah, customers, early settlement, in short, discount allowed. Discount allowed. A, B, C, D. Let me read it for you. How do you treat into the income statement? As an expense deducted from the gross profit. Sounds like an answer, but we don't straight away deduct from the gross profit, to be honest. Yeah, like straight away from the gross profit, we don't deduct. We show as an expense, less expense. Discount allowed is an expense, but included in the cost of sales. No, we don't put in the cost of sales. Cost of sales, we put opening inventory, purchase return, carriage inwards, closing inventory. A deduction from the value of the sales. Now, this is another dodgy sentence. Deduction from the value of the sales. When you do invoice, this is the answer, to be honest, but when you do invoice, from your invoice, this is an invoice, let's assume, yeah, you deduct that early settlement amount from the invoice paid within 7 days or 30 days. So for this particular question, this is the answer. But to be honest, discount allowed, you write after the gross profit as an expense. So take my 2 words, yeah, whatever suits best. Here it suits best. Deduction from the value of the sales. Or do you say deduct as a sales return? No, you deduct in the invoice system. That is the answer. Now there are many more questions similar like this. Next one was a receivables. I will choose few questions. Let me see if I report in this financial position. Let's do 33. This is also interesting. Let's do 33. Question number 33. Maybe this is our last one. Jesse's trial balance. It says receivables control, means trade receivables in short, 90,350. And allowance also given on a credit. Can you see no entries have been made respect cash 1320 received from Jeffrey, whose balance has been written off last year. What do you mean by that? This was a bad debt or irrecoverable debt last year. How do you treat this year, Colin? How do you treat this year? What is the double entry? I'm waiting for you guys, 30 seconds or 1 minute. How do you do double entry? What is debit and what is credit for this double entry highlighting? No, just asking double entry. This 1320, how do you do double entry in this particular year? Last year, we had a bad debt. We received money. No doubt, this is the good news for my business. I'm so happy. I'm going to do a pizza party with this 1320. Yeah, or 20 pounds, $1 pizza party, 13 in my pocket. Jokes apart. So what is the double entry? What is debit and what is credit? Tell me, what account is debit and what account is credit? Okay, let me help. Bank debit. Bank debit, I'm getting money, yeah? And recovery, there is a name, recovery of irrecoverable debt credit. Yeah, income or income. Yeah, irrecoverable, recovery of irrecoverable credit, debit bank. How about the next one? Irrecoverable of this to be written off. And this is this year, remember, this year. How do you do this double entry? What is the double entry of irrecoverable debt? Tell me. What is debit and what is credit? Okay. No worries, I'll wait for 30 more seconds, yeah? Great. Okay. Thank you, Nafi. I got the right answer. Irrecoverable is an expense, so that is debit. Irrecoverable debt of 1950, debit. And it is related to your receivables. Your receivables goes down. Like receivables were 50,000 before, now it is going down. Receivables, trade receivables. Yeah, not the bank. Trade receivables, credit. Then we have 1.5% of the allowance. So do you agree that 90,350, you do minus 1950, whatever is remaining, you do 1.5% on it? Do you agree with me? Yeah, that's to find your receivable. I don't know the question yet. Let's see the question. The figure will be reported as a financial position. So not so many double entry being asked, nothing to do with one, something to do with two. What is the something? Doing everything on my calculator, which is basically how much is your receivables? 90,350, right? 90,350 minus 1950. That is that times by 1.5% you need to deduct it. So times by 1.5%. So 88,400 minus 1326. So 87,074 should be shown on the balance sheet. Yep, 87,074. Great. Thank you, Rahab. Okay, I will keep this till here. 15, 16 questions are there, which is very straightforward. Last 10 questions are much straightforward. Looks bigger, but it is not yet. Like, what is the gross profit? What is the gross profit they sell? So how do you get the gross profit? Sales less cost of goods sold, isn't it? Yeah. So sales is given. Put that cost of goods sold. You need to find out opening inventory plus purchase plus carriage inward less closing inventory. You get cost of goods sold. It goes to your gross profit. Just a sample I showed you. Okay, guys. So I think that's all for today. We have few minutes left in the lesson, and I'd like to say thanks for your active participation. You have done it well. Yes, accounting is little challenging, not straightforward. You got to pay attention. My free YouTube on my YouTube channel, this is not monetized. We have more than 23,000 subscribers. This is demonetized, so you can enjoy your videos straight away. There are so many free courses on my website as well. Explore it. Yeah, ask for the links I will give you. I showed you my WhatsApp number at the beginning, which is again 00447983171108. My name is Ilias, and hope it helped this session. Hope you have enjoyed it. I will give you the answer books as well. So ask for the answer books. Let me show you what did we do today. Today, basically, we have done a lot of work already. A bit of bookkeeping, non-current asset depreciation, disposal. 1 or 2 questions were there. We couldn't touch accruals and prepayments, inventory, irrecoverable debt, doubtful debt, bank reconciliation, sales ledger, purchase ledger, sales ledger control. A lot of trial balance and errors we have done. There are a few questions regarding extended trial balance, 2-3 questions at the end. A bit of incomplete record backwards. You see the markup and margin, those are incomplete record, to be honest. Yeah, a bit of sole trader, like opening inventory plus purchase, like, you know, the gross profit and all. We have done our partnerships as well. Interpretation we didn't do, which is the ratio analysis, easy peasy questions. Yeah, Fatima, you're welcome. Also, this is from the AAT syllabus. For ACCA syllabus, pretty much everything we have covered, but few questions left over. My top tips, how you can pass your exams. Finish the book, whether BPP, Kaplan, Osborne, or First Intuition, or any book you're doing, finish it, syllabus. Do 2 question exam kit or question bank. 2 question bank. Minimum 3 mock exams. Minimum 3 mock exams. From your ACCA or AAT, you have online mock exams. Also from BPP and Kaplan, this type of. For extra mocks, please get in touch with me. I will definitely give you. Can we say thank you and goodbye for today? Yeah, you can unmute yourself and yep, Nafio, Olin, Rahat, Stella is there, also Hema, Fatima is there. Stella says thanks for everything. Fatima says thank you, good lesson. You're welcome, Stella. Hope it helped you. Rahat says thank you, sir, for the lesson. And Olin says thanks, welcome guys. Okay, so happy learning. Thanks for joining in out of your busy times. Of course, it is needed for you people. We are there to help you, inshallah. Hema says thank you for the help. You're more than welcome. Plenty of help available on my channel. Any further help needed, get in touch with my WhatsApp or email. You got my email as well. Let's say goodbye and see you in some other modules, other revision class. Bye-bye for today. Allah Hafiz.
Thank you.